All right, let's dive into what might be one of the most incredible corporate gambles in modern history. We're talking about a bet that took 100 years to cook and has just paid off in a way nobody saw coming. Let's get right into it. You're going to want to remember this date, January 3rd, 2026. Because let me tell you, on that day, the world didn't just wake up to a new reality. The entire geopolitical chessboard got flipped on its head. And no, that is not an exaggeration. We've just witnessed a full-scale U.S. military intervention in Venezuela. And smack dab in the middle of this whole thing, well, it's the one American oil giant that simply refused to pack its bags and go home.
So you're probably asking, what exactly just happened here? To really get a handle on where all this is going, we first have to understand the sheer scale of the earthquake that just shook the region. Okay, so here's the short version. A U.S. military op, codenamed Absolute Resolve, just removed the Maduro regime from power. Now, the stated goal is to put a transitional government in place and this is the kicker, to have American companies run Venezuela's oil sector to pay for the whole operation. So who's the only U.S. supermajor that already has the people, the pipelines, and the know-how right there on the ground? You guessed it, Chevron.
Which, of course, begs the question, how in the world did Chevron end up as the last one standing? I mean, its biggest competitors, they ran for the hills years ago. But Chevron stayed. And this wasn't an accident. It wasn't luck. This was the result of a century-long strategy built on almost unbelievable patience.
Just look at this timeline. It's really a masterclass in playing the long game. It all starts way back, but the Boscan field discovery in '46 was key. It created this unique technical bond that no one else had. Then you fast forward to 2007, the huge turning point where they decided to stay put, while everyone else bailed. They survived sanctions with just a skeleton crew, pulled off a brilliant legal move to start pumping again in 2022, and by last year, they were literally the only real diplomatic link between Washington and Caracas. This wasn't just a series of events. It was a deliberate, calculated strategy. And that 2007 decision, that was the fork in the road. When Chavez nationalized everything, Exxon and Conoco went for confrontation. They sued, they fought, they even won these huge judgments in court. But they lost their assets on the ground and never saw a dime. But Chevron, they played a different game entirely. They chose accommodation. They agreed to become a minority partner, all based on this one core belief. Governments come and go, but oil reserves are forever. They kept their foot in the door.
And then in 2022, they pulled off this move, General License 41. This thing was an absolute work of art, legally and financially. It let them start pumping and exporting oil again. But here's the genius part. Instead of paying any cash, taxes, or royalties to the Maduro government, every single dollar of revenue went to pay down the debt that Venezuela's state oil company owed to Chevron. They were literally getting paid back, de-risking their own books, while everybody else was stuck on the sidelines.
Okay, so that brings us right back to today, January 4th, 2026. In the chaos right after this intervention, Chevron's position isn't just strong, it's totally, completely dominant. They are the only game in town. Now, take a look at these joint ventures. And yeah, you might see those minority interest numbers and think, what's the big deal? But you're looking at the wrong column. The only column that matters right now is the last one, status. In a country where the rest of the oil industry has basically ground to a halt, these fields are the only ones that are actually reliably operational.
This chart really drives the point home. Sure, Chevron's projects are technically only about a quarter of the country's total output. But that other 74%, most of that is on paper. It's theoretical. It was dependent on sketchy deals and shadow tankers that are now completely cut off. That 26% is the only slice of the pie that is real, stable, and flowing out into the global market.
And it all comes down to this number, roughly 240,000 barrels per day. That's the output that makes Chevron the absolute linchpin of this entire situation. It's the only source of real revenue to rebuild the country, and it happens to be the exact kind of heavy crude that all those complex refineries on the U.S. Gulf Coast are desperate for.
Okay, so for anyone watching the markets, this is the big question, right? What on earth does this mean for Chevron stock and its valuation? Well, this is where it gets really interesting, because we're basically looking at three very different potential futures. All right, first up, the most likely path, about a 55% chance. We're calling it the managed transition. A stable, U.S.-backed government of experts gets put in place. Chevron gets a brand new license, one that lets them invest for growth, not just to keep the lights on. Production ramps up nice and steady. For an investor, this is the safe and sound scenario. They get all their old debt paid back, and they can start putting in new capital for solid, low-risk growth. Then you've got the bull case, the scenario that has investors really excited. We're talking Texas of the South. In this version, the U.S. pushes for a total privatization, a radical restructuring of Venezuela's oil industry. Just imagine, Chevron gets awarded 100% ownership of its fields. They launch a massive drilling campaign, bringing in new rigs. Production skyrockets past 500,000 barrels a day. The financial impact would be immense. Venezuela basically becomes a new Permian Basin for them, and billions of barrels of oil reserves get added to their balance sheet like overnight. But, and this is a big but, there's a serious downside. The bear case, the quagmire, has about a 20% chance of happening. In this future, the intervention just doesn't work. The country splinters, you get an insurgency that starts blowing up pipelines and attacking oil workers. Think about what happened in post-invasion Iraq. On top of that, China and Russia tie up all the oil exports in international courts. The financial hit would be an absolute catastrophe. Production would just collapse, and Chevron would have to write down its entire Venezuelan business. 2-0. So when you step back and look at all these possibilities, the good, the incredible, and the disastrous, what's the real takeaway here? It's that the game hasn't just been changed. A completely new board has been laid out. And this really is the bottom line. After a century of patience, Chevron is no longer just another oil company operating in Venezuela. It has transformed itself into the industrial and financial anchor of American foreign policy for the entire hemisphere. Its corporate interests and U.S. national security are now one and the same, giving it a level of government backing that its rivals can only dream of. And that leaves all of us with one final and pretty heavy question to think about. When a corporation's long-term strategy and a superpower's foreign policy become so perfectly intertwined, who really gets to collect the prize? And if it all goes south, who's left holding the bag?